On a good investment? I have no idea. I've never researched it before, but that's what you're about to see us do. My name is Brian Feroldi, and in this series, Brian Stoffel and I take a stock we've never researched before, and we do so live. So you're going to see us dig into the company's investor relations website, dig into the company's 10K, cross our fingers that there's a presentation, and today's stock is Micron. Brian, do you know anything about Micron?
Are they a chip maker?
Chip maker is what I understand. Something
All
to
right.
do with chips.
I mean, like that's pretty much the entirety of what I know. And let me just also say that I hope that we're still live. We apologize to everyone who we are cut off after 7 seconds last week. We do have an episode about Farfetch coming out soon.
Yes, and Samuel with the comment, many famous investors own shares in Micron, including Manish Pabrai, I don't know how to pronounce his last name, and Andrew Rosenblum. Very cool. This was a stock that I know was very popular for many years with some investors that had a very cult-like following, but I don't know what the company does or the competitive advantage or any of that. I think it has something to do with semiconductors, which means that probably business has been really good for the last couple of years.
I was just going to say what you did. The second half of what you just said about competitive advantages, that's going to be what we dig into, right? Because whenever someone makes physical products, I'm like, I'm not that interested. Obviously, if you're a chip maker, it's been a really good time to be a chip maker. So I'm curious.
Yes,
Look,
as am I.
On our scorecard, do you want to know what one of the best performing stocks on our scorecard is? Now, granted, our scorecard is terrible, like terrible right now. But yes, NVIDIA.
Okay.
So there you go.
Good to know. So we're going to be starting with our investing checklist as usual. Ticker symbol is MU. This is a $77 stock.
Whoa!
87 big Evans, $87 billion company. Wow, that's way bigger than I thought it was going to be. So we're going to be filling out this Feroldi quality score. Is revenue recurring? I'm going to guess no.
We'll see.
Is it profitable? I'm going to guess yes. Is it free cash flow positive? I'm going to guess yes. And how is it done versus the market? Well, it's only down 20%.
I'm going to guess it's a beater.
I'm going to guess it's a market beater, but we'll go back and fill in all that kind of stuff on as we go along. And we're going to start with start our search as usual.
Today's sponsor
with stockcard.io, which is the sponsor of the show. So we typed in the ticker symbol Micron Technology, ticker symbol MU. So if you look at all time, yeah, plus 2,900%.
I love this function on StockCard that it lets us see, because look at what it did, like right during the .com bust. Yeah. It looks like it's just caught up to where it was during the .com era.
Oh yeah,
so it's 77 right
now. Still down since then. But over the last 5 years, up 171%, and up year to date down a little bit. But so I'm guessing it's a market beater. All right.
And I'm gonna take a guess too that there's probably a dividend involved, which ups that return as well. Oh, teeny tiny.
Micron historically focused on designing and manufacturing DRAM for PCs and servers. The firm has expanded into the NAND flash memory market. It increased its DRAM scale with the purchase of Elpida, completed in 2013. Inotera, completed in December 2016. The firm's DRAM and NAND products tailored to PCs, data centers, smartphones, game consoles, automotives, and other computing devices. So already kind of like NVIDIA, not competing products, but it's a tech hardware supplier.
Now, I'm just looking at these numbers here before you go down. Long-term debt looks like it's at about $6 billion. Yeah.
Yep.
And free cash flow, $3.9 billion. That's very good.
$4 billion. So if that's correct, then 21 times free cash flow. This says 11 times earnings. So there's obviously a big difference between free cash flow and net income. Trading at under 3 times sales. Maybe that's a good price. Maybe it's not. Totally depends on the company's growth and margins and all that kind of stuff.
I just want to say real quick, it looks too, because StockCard has a calendar for us too, that their earnings will be coming up next week too. So that'll be something to keep your eye on if you're interested in it.
There you go. So revenue is up 33% in the most recent quarter, 29% in the most recent year. Their 3-year revenue growth rate negative. Huh. So maybe they're selling businesses and swapping out other ones. I don't know. They are profitable. $5 in earnings per share. Last fiscal year, almost 660 in the past 12 months. So yeah, that's where you get that 12 times earnings. Gross margin 46%. Okay. Cash availability, good quick ratios. Management effectiveness. Return on capital 15%. Return on assets 13%, and return on equity 17%. So good returns on capital for the company. Okay, a good start. Let's head on over to the company's investor relations website, and
And
we'll
Brian, but
start.
while you're doing that, do you know what DRAM and NAND mean?
RAM stands for random access memory. I don't know what the D means. Do
Okay.
you?
I don't. And
Quarterly.
NAND?
I don't know that off the top of my head. No.
All right.
Our
I don't either.
viewers-
So I'm not quizzing you. I literally don't either.
Yeah. Okay. All right. So right on here, investor relations. For more than 40 years, we have been a world leader in innovative memory and storage solutions that accelerate the transformation of information into intelligence, inspiring the world to learn, communicate, and advance faster than ever. We deliver the world's broadest portfolio of technologies at the core of today's most disruptive breakthroughs, such as artificial intelligence and autonomous vehicles. So they're a supplier for all the key buzzwords.
Yep. I was just going to say they fit them all in.
Okay. Yeah, so they have earnings coming up next week, as you said. So we do have a presentation. We do have their most recent quarterly results. We do have their 21 proxy statements.
That's good.
So we can go for that. Form 10K of 2021. Is that coming up? Great. Just got to share that screen. I think that's it. Give me one sec. Oh, that's the DEF 14A. So that's the proxy. That's the most recent earnings report. And here are the financial results. One sec. Yeah, I shared the wrong one. Give me one sec.
While you do that, I just want to say, so Brandon and Paul are giving us a hand. DRAM is dynamic random access memory. I am a former middle school teacher, so that still doesn't help me out at all. Not that middle school teachers wouldn't know that, but I was a writing teacher. So, and Brandon says that NAND, those are the chips on a random access memory or hard drive that contain the storage bits. Thank you. I still don't really understand it, but we do this to make all of you feel smarter, and
That's
hopefully
right.
listening to me talk will convince you of that.
Okay, so here is from their 10K. That's their annual report. So founded 1978, headquartered Boise, Idaho.
How many companies have we covered headquartered in Boise, Idaho?
I can't name another.
Yeah, I'm at zero.
$28 billion in revenue, the fourth largest semiconductor company in the world with an asterisk. 135, 47,000 patents, 17 countries, 12 manufacturing sites and labs, 43,000 members. Okay, it's all about data. Data is today's new business currency, and memory and storage are a critical foundation for the data economy. Memory and storage innovations will help transform society and enable significant value for all. Okay. Micron designs, develops, and manufactures industry-leading memory and storage products by providing foundational capabilities for AI and 5G across data centers, the intelligence edge, and consumer devices. We unlock innovations across industries, including healthcare, automotive, and communications. Our technology and expertise are central to maximizing value from cutting-edge computer applications and new business models, which disrupt and advance the industry. They're giving themselves a lot of credit, because I understand memory to just be and storage just be components of computers. Maybe there's software that makes them more integrated. Like that was one of my big questions with NVIDIA, and NVIDIA has been a stellar investment. And after doing the research on them, they seem to be more. It was more than just the brand that was keeping consumers locked in. I wonder if there's something like that with Micron. As the global leader in memory and storage, we are transforming the world how it uses information to enrich life for all. Whew. They're enriching life for all by advancing technologies that collect, store, and manage data with unprecedented speed and efficiency. Okay. We lead the transformation of data into intelligence with software, or how do you do that? Is it just like speed? I don't know. In a world of change, we remain nimble, delivering products that help inspire the world to learn, communicate, and advance faster than ever.
I mean, all that's great. I see like 4 different mission statements in there.
Yeah, they don't have really that. I don't see anything out. Global portfolio product. DRAM, NAND, NOR, solid state drives. I know what those are.
Explain.
Graphics. It's a drive, like formerly the spinning disks, right? Solid states don't move. They're static, so they're much faster. There's no moving parts.
Okay.
Graphics and high bandwidth memory, managed NAND, and multi-chip packages. So they are focused on the memory, which is a critical component to a computer and to devices. All computers need memory to work. That's where a lot of the processing and stuff happens.
I wonder if managed NAND means that there's some aspect of programmability that locks customers in. That's just me.
I don't know.
I'm just curious.
So they have a global footprint, our vision. Oh, mission, be a global leader in memory and storage solutions.
Like 17 thumbs down, especially when you had to transform how the world uses information to enrich life for all. That's a mission. And a vision is what you hope to see. Just switch those.
Yeah.
Right?
They don't know what mission and vision are. So swap those around, they do get better. Okay.
Yes.
Values. We strive to live the following core values. We care, nothing shakes or resolve. We develop solutions, collaborate, customer focus. Okay. All right. Definitions of terms. Okay, they have okay. Micron, including its subsidiaries, is an industry leader in innovative memory and storage solutions, transforming how the world uses information to enrich life for all.
Just make that your mission statement.
With a relentless focus on our customers, technology, and manufacturing, Micron delivers a rich portfolio of high-performance DRAM, NAND, and NOR memory and storage products through our Micron and Crucial brands. Every day, the innovations that our people create fuel the data economy, enabling advances in artificial intelligence and 5G that unleash opportunities. So this is a 5G play from the data center to the intelligence edge and across the client and mobile user experience. We manufacture our products at wholly owned facilities.
I thought Intel was one of the only ones that did this. That
I
didn't
was
use
too.
Taiwan. Well, there you go. So
Okay.
someone else that doesn't exclusively rely on a third party. There are some, we could argue, low-cost production advantages to that.
Yep, definitely. And also utilize subcontractors to perform certain manufacturer processes. So it's a hybrid, it looks like. We make significant investments to develop proprietary products and process technology, which are implemented in our manufacturing facilities. Advancements in product and processing technology generally increase the density per wafer and reduce manufacturing costs of each generation of products. So that's what they're focusing on. More density per wafer and lower costs. Make sense? We continue to introduce new generations of products that offer improved performance characteristics, including higher data transfer rates, advanced packaging, lower power consumption, improved rewrite reliability, and increased memory density. Yeah. We introduced the 176-layer NAND and 1-alpha DRAM, representing major technology breakthroughs through our company and the first time in our history that we've achieved industry leadership across these two flagship technologies. So are they the market share leader in NAND and DRAM?
I mean, at that size, I would imagine they've got to be up there.
This advancement has been realized across our standard compute DRAM and LPDRAM product lines. We are shipping these products in volume. We have partnered with customers to provide value-added innovation, speed market adoption of our new solutions, and prepare the ecosystem for broad adoption of our offerings across markets. We also launched 176 NAND-based solutions in the market in 2021. Our managed NAND and SSD products incorporate NAND, a controller, firmware, and in some cases, DRAM. An increasing portion of our SSD incorporate proprietary controllers and firmware that we have developed. Development of advanced technologies enable us to diversify our product portfolio towards a richer mix of differentiated, high-value solutions and to target high-growth markets and specific customer requirements across data centers, intelligence edge, client, and mobile. We face intense competition in the semiconductor memory and storage markets, and to remain competitive, we must continuously develop new products and technologies and decrease our cost. Our success is largely dependent on obtaining returns on our research and development, efficient utilization of our manufacturing infrastructure, development and integration of advanced product and processes, market acceptance, and efficient capital spending. Yeah, that's always been my big problem with these kind of companies is they do face intense competition, and I think it's just a race to the bottom on pricing.
Right. And you know, what NVIDIA and Micron probably too remind me of is that for my own framework, if a company scores badly on it, it doesn't mean it's going to be a bad investment. They can be really good investments. It's just I need to know that there's something that gives them a durable moat.
Correct. Right. That's what we're both looking for. And optionality.
Yes.
In the second quarter, we updated our portfolio strategy to further strengthen our focus on memory and storage innovations for the data center market. In connection therewithin, we predetermined there is insufficient market validation to justify the ongoing investments required to commercialize 3D XPoint at scale. Accordingly, we ceased development of that technology and engaged in discussions with potential buyers for the sale of our facility in Lehi,
Utah.
Dedicated to 3D XPoint production. All right, so they said we can't win here. Yep. And this was second quarter of 2021. So that would be if they sold it. As a result, we classified the property, plant, and equipment as held for sale and ceased depreciating the assets. In 2021, we announced that we entered into a definitive agreement to sell them for $900 million. The sale will close in the first quarter of 2022. That's now. Select tools and other equipment will be retained and redeployed for other manufacturing sites. In the third quarter, we recognize an impairment charge of $435 million to write down the assets held for sale. Okay. Impact of COVID-19.
Demand.
Yes.
Up.
And our ability to respond down. Okay. Products and technologies. Here we go. Our product portfolio of memory storage solutions is based on high-performance semiconductor memory and storage technologies and other technologies. We sell our products into various markets through our business units in numerous forms, including wafers, components, modules, SSDs, etc. Our system-level solutions, including SSDs and managed NAND, combine NAND, a controller, firmware, and in some cases DRAM. DRAM products. They've yet to define what DRAM stands for, by the way.
They do here. They finally do. Dynamic Random Access Memory Semiconductor Devices.
There we go. With low latency, quick response that provide high-speed data retrieval with a variety of performance characteristics. DRAM products lose content when power is turned off, volatile, and are most commonly used in client, cloud servers, enterprises, networking, graphics, industrial, and automotive markets. LP DRAM products, which are engineered to meet standards for performance and power consumption, are sold into smartphones and other mobile device markets because I would assume power is much more, efficiency is much more important, as well as automotive, industrial, and consumer. Okay. NAND products are non-volatile, rewritable semiconductor storage solutions that provide high capacity, low cost storage with a variety of performance characteristics. NAND is used in SSDs,
solid state drives.
Yes, for the enterprise and cloud, client, and consumer markets, and in removable storage markets. Managed NAND is used in smartphones and other mobile devices, in consumer, automotive, and embedded. Low density NAND is ideal for applications like automotive surveillance, machine-to-machine automation, printing, and home networking. NOR are non-volatile, rewritable semiconductor memory devices that provide fast read speeds. It's commonly used for reliable code storage, operating system in place, and for frequently changing small data storage, and is ideal for automotive, industrial, and consumer applications. And 3D XPoint
just got rid of.
ceased operations. Okay. Products by business unit. Compute and Network Business Unit, CNBU. Includes memory and solutions sold into client, clouds, enterprise graphics, and networking. Reported revenue of $12.28 billion. and that was up substantially, up 40%, and that was down from 2019. So 2020 was a down year, and then 2021 was a big up year. Sales are primarily of DRAM products produced on 1X, 1Y, and 1Z technology nodes. No idea what that means. We were first to introduce products built for 1-alpha DRAM process technology, which offers major improvements in bit power, density, and performance. Okay. DRAM in various products across PC, server, and mobile, accounting for a meaningful portion of our revenue. Client. CNBU sales to the client market consisting of those products just sold to client market to support both commercial and consumer PC growth, with growth driven by rapid deployment of PCs from the work of home and e-learning environments. Okay. Cloud servers, they sell to the consisting of DDR4 DRAM products. The cloud server market continued to experience healthy demand due to work from home and e-learning environments, video streaming, and significant increase in e-commerce activity. Is that going to dry up once everyone has a computer and working from home?
I mean, I don't think it's going to dry up, but it'll probably slow.
Yeah. The cloud server market has been driven in part by intelligence edge devices capable of artificial intelligence and augmented reality that store and access data in the cloud. So this is a growing that from that perspective, that's going to be a theoretically.
That's why I say I don't think it's going to go anywhere, but if those are the major drivers, it could slow. Enterprise.
CNBU sales in the enterprise market consisted primarily of DDR4 products. We continue to make progress in transitioning to DDR5. Okay, is that the next generation?
Must be.
Which doubles bandwidth and reduces power. We are on track to support consumers as they begin to reduce these platforms in the second half of 2021. CPNU sales to the graphics market considered primarily of GDDR6 graphics products. We started shipping them in 2020 for next generation gaming consoles. Okay, so I wonder if like Sony or Microsoft is a big customer. End users, including artificial intelligence, virtual and augmented reality, 4 and 8K gaming, professional design, and then finally networking. And then there's this, which is memory bits sold to Intel. Mobile business units is smartphone and other mobile device markets. In creating those products, all of them are high capacity. Sales were 6.4, 5.7, so down big time in 2020, and then up in 2021.
About 40 some odd percent-ish.
Yeah, but only
maybe a little bit less.
15% growth over 2019.
Yeah.
In the first quarter, we are first to market with UMCP5, the industry's first UFS 3.1 multi-chip package with LPDDR5. Which combines low power and storage into one complete package. 5G workloads, we began shipping 1-alpha node package with all that stuff. Power improvements, volume production, enabling 5G. So they smell into smartphones. We could kind of skip over this up because we get the gist. Okay.
Storage business.
Okay.
Number 3.
Okay. Components sold to enterprise and the cloud. Revenue of $4 billion, and 3.0. So this is a very slow growth business. Okay. So that is a stable but slower growth, and they're their end markets. Okay. Embedded business unit.
Jeez, how many do we have?
Memory and storage products sold into industrial, automotive, and consumer markets. Okay. And this was 3.1 down, and then 4.21 billion. I thought sales skyrocketed for a lot of these companies in 2020, or is that because COVID caused?
I don't think it was so much as sales as, I mean, if you add all these pieces together, they probably did skyrocket, but it's more like, excuse me, it's more like demand couldn't be met.
Yeah, with supply, sure. Okay. But that was pretty consistent where it was like 2019, 2020, 2021.
Yep.
Okay. Marketing. We seek to build collaborative relationships with our customers to understand their unique opportunities and challenges. By engaging with the customers early in the product lifecycle to identify and design features, performance, we are able to manufacture products that anticipate and address our customers' needs.
Unless it's the one that they just had to discontinue.
Well, that was a product line, right?
Yeah. But it says we are able to manufacture products that anticipate and address our customers' changing needs. I'm just saying, like,
They don't
let's
always
remember,
get it right.
Yeah, no one gets it right.
Collaborating with our customers on their design needs and changing in markets and meeting with their timelines for qualified new products allows us to differentiate our memory and storage solutions, which provides greater value to our customers. Okay.
I could see how there's some switching costs involved in there per product cycle.
Yes.
If you're
Yes.
partnering early on, but it's not a 10-year high switching cost.
Technology moves way too fast for that.
Yeah, it's a cycle. So maybe 2 or 3 years.
Our semiconductor memory and storage products are offered under our Micron and Crucial brand names and through private labels. So they're selling it. It's somebody else's brand. They're actually making it, but somebody else is branding it. We market our semiconductor memory and storage products primarily through our own direct sales force and maintain sales representative offices to support our customer base. Our products are offered through independent sales reps, distributors, and retailers. Obtain orders subject to final acceptance by us, and then we make shipments. Distributors carry our product in inventory. We sell our Crucial branded products through a web-based consumer direct sales channel as well through channel marketing. I wonder if I have their memory in my iMac that I'm doing this on. Due to volatile industry conditions, our customers are generally reluctant to enter into long-term fixed price purchase contracts. We typically accept orders with acknowledgement that pricing, quantity, and other terms may be adjusted to reflect market conditions at the time of shipment.
And sometimes that can be beneficial, and sometimes it can really not be beneficial. I bet right now that's actually beneficial.
I bet it's hugely beneficial. Long term?
Yeah, I was going to say, when's the last time that happened?
In each of the last 3 years, approximately 1/2 of our total revenue was from our top 10 customers. 50% of revenue was from 10 customers.
Does that bother you? Because, like, if you carry that
Depends.
out.
Depends on who they are and what the concentration is.
Exactly.
Yeah. Competition. We face intense competition from Intel, Toshiba. Okay. Samsung, SK, Western Digital. Some of our competitors are large and have greater resources. Okay. Consolidation could put us at a competitive disadvantage. We improve yields, increase the world supply, may capitalize on to further increase worldwide supply. Okay. Manufacturing. We manufacture our own products within our own facilities in Taiwan, Singapore, Japan, and the US, Malaysia, and China, and we subcontract some health. Our products are manufactured on 300 millimeter wafers in facilities that generally operate 24 hours a day, 7 days per week. Share a number of common manufacturing processes, enabling us to leverage our product and process technology across product lines. So that's good. Our products are manufactured semiconductor. Our processes for manufacturing semiconductor products is complex and involves numerous precise steps, including wafer assembly and testing.
Our friend John Rotanti has done some episodes on this, and he calls it's like black magic. Like, there's only a couple companies in the whole world who know how to do this.
Yeah, so complex. About how I can't imagine how hard these is to make this stuff. So complex. Like, what these companies do is incredibly impressive, right?
And without them, I mean, we would adjust eventually, but there would be a rough adaptation period if it all of a sudden disappeared.
Yeah. Package form and unpackage. We test our products. We use our proprietary Ambix line of intelligent test and burn-in systems to perform simultaneously circuit tests of semiconductor die, capturing quality and reliability data and reducing test time and cost. All right. That could be a low cost advantage if that indeed is an industry-leading thing. We have produced an increasing broad portfolio of product and system solutions, which enable us to allocate resources. Our product lines generally use similar manufacturing processes. Our costs can be affected by frequent conversion to new products. Okay. Resources, supply chain. We generally have multiple sources of supply. Only a limited number of suppliers are capable of delivering certain materials and services that meet our standards. Yeah. So there's supplier concentration, or there could be.
I'm sure there is.
With third-party manufacturers. Yep. Trade disputes.
If you go up a little bit,
patents. Yep.
It says if China were to restrict or stop exporting the These materials, our suppliers' ability to obtain such supply may be constrained, and we may be unable to obtain sufficient qualities or obtain supply in a timely manner. All right, there's some geopolitical risk there.
Yep, a little bit. But that's generally true of the semiconductor industry, right?
Yes,
right?
absolutely.
And semiconductors are key components in the modern world.
Yep.
Research and development. We're focused on all of that. Yep. Human capital. 43,000 employees. 74% are in Asia. I wonder if that's because of manufacturing.
I would assume so, especially if you've got plants that are open 24 hours a day, 7 days a week.
We added 1 female to the board of directors. Okay. 4 men and 4 women. That's great. Talent acquisition. 88% of our team members. Management used feedback from the survey to identify and implement continuous improvements to our culture. And
they're not going to tell us how they did.
Yeah.
We did a survey.
And everybody participated. Government regulations and compliance, trade regulations. Okay, great. Scott Allen, Chief Accounting Officer. Chief
Alphabetical. I like
Officer. EVP, Senior Vice President, Technology. Sanjay Mehrotra, there you go, joined in May of 27 as our president, CEO, and director. He co-founded SanDisk, until his eventual sale in 2016. So he's exactly who you want.
Yes.
Right? He didn't found the company, but he's been there for 5 years, and he's 63 now, likely 64. So cool.
I'll also point out, before you go any further, they pointed out Western Digital. They said Intel, Toshiba, Western Digital. And I'm looking, and he sat on the board of directors for Western Digital for 9 years. No, for just a year. Okay. But still, I mean,
he's connected. He's smart. He knows the industry, right? He's not the founder, but this business is 40-something years old.
Yeah.
Nearly 50. So I wish he was there longer, but he seems exactly like the kind of pedigree you want. He is a founder. He is a founder. I mean, yes.
Yeah.
So that's good. CFO. Okay. Let's go. Was there anything else in there? Actually, we're in here.
Was that the 10K?
Yes.
Well, let's look at concentration.
Yeah, since we're in here. Concentrations. So mobile, client and graphics, enterprise. Well, their product line is certainly...
That's pretty diverse.
Yes. Okay. Revenue from WPG was 13% of total revenue. Kingston was 11%. Highway was 12%. Oh, that's 2019.
So the only one that's really on there for 2021
is this one,
WPG. And do you know what that is? Because I don't.
Nope.
I could look it up while we keep going.
I don't know who that is. And then sales in the U.S. were about 40% of the total. Taiwan, based on the geographic location of our customers' headquarters.
That doesn't tell you much.
That doesn't tell you much at all. So this is going to be the majority of sales are external, which makes sense because most computers and electronics are assembled in Asia.
Okay. WPG is headquartered in Taiwan, and it's a semiconductor components distributor.
Okay.
There you go.
So they do have one major customer that's 10% of revenue.
And it looks like they'll always have some, and it looks like that list was changing over time too.
Yes. Okay, so let's go to the proxy statement since we can be here.
Yeah.
So let's go to ownership.
I'm going to guess it's low.
I'm also going to guess it's low. Beneficial ownership table.
And for those wondering why, that's because when a company is this old, insiders usually aren't around anymore.
This is the guy, right? Sanjay?
Yep.
So he has
1 million.
1 million shares owned, another 700,000 options. So 900,000 times, what's the share price?
77.
So
it's like 70 million.
70 million-ish bucks.
which probably is not very much for someone that founded and sold SanDisk.
Yeah. So all insiders own 2.6 million, 3.5 million with options, and that's not even 1%. So inside ownership here, not high, not all that surprising.
No,
Given
not
the
surprising
size
at all.
and scale of this business, and all of that kind of stuff. Okay, let's do let's go to the most recent quarterly results, and then we can get a look at some of their balance sheet and stuff. Nope, not that.
When they might have an odd calendar too. I think it's possible. Yeah, they do have an odd calendar. So what we saw was not totally up to date. So they're going to be coming out with second quarter earnings. They'll be coming out with second quarter earnings in a week.
Yeah. Okay. So first quarter of fiscal 22 ended in December. So that's why they're off a little bit. Okay. So revenue was 7.97 billion versus 7.2
for the prior.
Oh no,
period.
for the prior quarter.
Right.
And down. So they must sell big before the holiday season because they're a supplier, and then the next quarter. So maybe Q1 is their low period.
Yeah. But still, that's 33% sales year over year.
Yes.
Growth.
Net income was $2. I hate when they just state stuff like this. Like, give us
don't compare it.
Yeah. Delivered first quarter results led by strong profit momentum. We are now shipping our latest DRAM and NAND technologies. We delivered new solutions in all those end markets. We have the secular trends of 5G, AI, and EV adoption. Our technology leadership and world-class position us to create significant value in fiscal 22 and beyond. Okay.
Now, for one thing I want to point out here, because we talked about the revenue growth, and we'll go with non-GAAP here, but their operating income almost tripled.
Well, let's look.
And because look at their operating expenses barely budged.
But look at their gross margin.
Right. So I guess my point here.
I don't like that.
So tell me why you don't like that, because there's something that I do like about that. But go ahead. Let's think this out.
Look how volatile that is.
That is volatile. But to me, what that has me thinking is that that there are price advantages. Because if they're able to sell that much more and their operating expenses, they went from 811 million to 891 million in expenses. That's barely moving at all. And they were able to increase their revenue by 34%. So I agree with you. It is very volatile. And at the same time, it leads me to believe that there are some benefits to owning and manufacturing their own stuff.
So this is the problem that I have with tech hardware companies. It's pricing, right? Pricing is always going to be tricky. They can always reduce prices to move, and they admitted that in the 10K, that they don't have their contracts sign long-term things. They kind of figure it out based on market conditions. Right. Well, if your gross margin last year was 31%, I'm assuming that's a down number. Mm-hmm. Like, I'm assuming that was under pressure, and then all of a sudden it goes to 47%. Like, that's some volatility in your gross profits. So how do you have confidence that this company is going to be making higher profits in the future if its margins are all over the place?
And to be clear, it could be that my theory that I just put out there holds no water at all. That increase in revenue isn't because an increase in volume; it's just an increase in price per chip that they're delivering.
Yeah. So look at their earnings, right? So that looks like 78 cents to 216. I mean, that almost looks like an auto company, like boom times, bad times.
I was going to say, to me, it's like an oil company.
Yes, or an oil company.
Like an oil components company.
Now, we might be being overcritical because 2020 and 2021 were such weird years, right? Longer term, I would want to know that this was the norm and this was the exception, as opposed to, just knowing that gross margins, just all over the place. But they're huge growth in profits, right?
You want to see something crazy? Read that first thing. Investments and capital expenditures net were 3.3 billion for the first quarter.
Wow.
And yet they were still free cash flow positive. But 3.3 billion in one quarter.
They repurchased 3.6 million shares of common stock, and they ended the quarter with 11.5 billion in cash, for a net cash position of 4.46 billion, which means they have debt of seven. They have debt of billion. Okay. They declared a board quarterly dividend of 10 cents per share. They can easily afford that, right? That was a quarter. Yeah. So low. So for next quarter, they're anticipating gross margin of 45-ish%. So last quarter it was 47. Oh, that was a GAAP and non-GAAP. All right. So they're predicting this is going to stabilize, at least in the near term.
So what are they saying? 7.5 billion in sales? I'll do a quick lookup to see what kind of growth that is.
Well, quarter over quarter, it would be down, but yeah, year over year, we don't know. Because why would they provide us with that?
Right.
Why would they give us that?
That's silly.
So let's look at costs, though. So last quarter, this is the most recent quarter. So gross, they call it gross margin. That's gross profit. If you're in the financial statements at Micron, that's called gross profit, not gross margin. And they spent only that much on SD&A. So their cost to acquire customers, very low.
I imagine being involved in this for 40 years and being integrated
very much
plays
so.
a role.
Very much so. So that's attractive.
Yeah.
They're spending on R&D was also their biggest cost. That's attractive. So yeah, okay. So customer acquisition cost extremely low.
Now, just for to give a thing, 21% growth is what they're saying.
Okay, 21% growth,
which is not bad for a company this big.
And then the diluted share count, I think this was a year ago. Yep. So that was that was a year ago. So they had 1.135 billion shares. I assume million. 1.135 billion shares, and now they have 1.13. So their buybacks reduced the share count by 0.5%.
Yeah,
maybe. So it's not dilution isn't high.
Real quick, I missed the R&D spend because I was trying to figure out.
Oh, it was big.
Yeah,
it was 712 billion on.
So 20% of gross profit,
and 10% of sales.
Okay.
The balance sheet, pretty high receivable balance, pretty high inventory balance, property, plant, and equipment, and then long-term debt of 7 billion, accounts payable of 5. So a very healthy balance sheet.
Yep.
A very healthy balance sheet. Cash flow. So they said 2.35 in.
This is just for the 3 months.
3-month ending. Right. So 3 month isn't going to tell us all that much. Huge depreciation. Stock-based comp, not much on a percentage basis. So that, and then they blew all that money. Yeah. So that just must be the timing of things. But but
let me just point out, those are some significant expenditures numbers. That's
huge.
That's the flip side of owning your own foundries. One thing I just want to throw in there too is because Sasha just chimed in. In 2016, gross margins were 20%. In 2018, they were up to 60%. In 2020, they were around 30%, and they're rising again. So,
so gross margins doing this.
Yeah, but it's like it is like oil.
Yes, it is like oil. So it's boom times to tough times. Boom times to tough times.
So that vertical, to be clear, what that vertical integration does is it makes it particularly painful during bust times and particularly wonderful during boom times.
Yes.
And we're in that particularly wonderful time right now.
By the way, hence why this company trades at such a low price to earnings ratio.
Right, exactly. I was going to say it's not reliable.
That's the market's way of saying we don't trust this. Right. We can't, we don't foresee this number being sustainable. So we're giving it a very low PE ratio. So don't look at this company's PE ratio and say, it's so cheap. If the E is artificially inflated, the PE is artificially deflated. Conversely, once earnings disappear, once an inevitable downturn comes, the PE ratio will skyrocket. And they'll look so high.
I remember when I started investing, I read about how with oil companies, you should invest in the ones that have really high PE ratios because the cycle that goes back and forth is kind of the inverse of what you are with the rest of companies. So, and I made that mistake. I invested in a whole bunch of oil stocks back in like 2011 because they were trading at like 6 times earnings.
Yeah, 6
and
times
I
earnings,
lost
right?
like 80% in each of those.
Hence why the PE ratio is a metric, but it's not the only metric you can rely on. Okay. Overall, good ratings, 3.9 stars, almost 1,500 ratings, 85% approval of the rate of the CEO. Good to a friend. Work-life balance is by far the worst one. Senior management is second worst.
Ooh, and
And
look at wait. Can you go to the overall trends? I'm just curious because all right, so this is trending up quite a bit.
yeah.
If we did this a bunch of months ago, it would have been uglier.
Yeah, so has the stock. So it's trending up with the stock. And he's been the CEO this whole time. So it's not like new CEO came in. We might be doing that at just a cyclical high time. Okay, is there anything else you want to review?
Oh, let's see. I don't think so.
I don't know how I'm going to score this for optionality. I don't know how I'm going to score this for moat, but I'm going to take my best guess.
Yep.
and we will go from there. Actually, there's one thing I do want to check. Let's go to give me one sec. Let's go to Y charts for a sec. And here we go. Okay, so MU. So how has this company done versus the market? So it's beaten the market over the last 5 years. It's crushed it over the long term. And if we go
wait, go back for a second because I agree with you. It's crushed it over the long term. But if you look at it, if you go back to 2016, maybe it was right on par with the market.
Yeah, and then let's see if we can pull up their gross profit margin. Yeah, look at that.
All over the place.
So that's what their gross margin does, right? Boom times 60%, and then there's a cyclical low, and then boom times, and then a cyclical low. So it was even negative back in 2008.
I mean, it kind of what it does is it just reminds you one of my favorite things that Morgan Housel has written, and he wrote this a long time ago, was you know what the solution to high gas prices are?
Low gas prices.
No, high gas prices.
High gas prices.
High gas prices motivate people to drill for more oil, which then all of a sudden makes the gas prices drop to zero. Do you know what the solution for high component chip parts is?
High component
chip parts.
Yeah. Okay. Is revenue recurring? I'm gonna say sort of.
Sort of. I agree.
Sort of. If you are a buying from them, you're buying that chip or whatever until until the next hyper chip comes out. So sort of, right? Revenue is sort of cyclical there. Are they profitable? Yes, for now. Are they free cash flow positive? Yes, for now. Have they beaten the S&P 500? Yes, for now. Okay.
Before you get started, real quick, I just want to say the one difference between that analogy that we just did with Morgan Housel and this is that it is not black magic to drill for oil. So the ability to just get people out there drilling for oil, that is a fundamental difference between making computer chips and drilling for oil.
Sure. Mad respect to what they do. Running the business is hard, no doubt, but is it worth my investment dollar? That's what we're trying to figure out.
Right.
All right. Balance sheet, I'll give them 5.
Yeah.
Okay. Gross margin, I'm going to give them a 0.
This is just because you don't know.
It's below 50%, right? One, but I have no faith that this gross margin will ever stabilize and stay high. Returns on capital, they were good for right now, right? Free cash flow was positive and rising. Earnings per share were positive and rising. Yet again, actually, I'm going to go 2 on that because no, I'll be fair. That's what's happening right now.
Yes.
Okay. Network, do they have a moat? Do they have a network effect or a product ecosystem? I didn't see anything about our chips. Our NAND works with our DRAM and it all makes it work together. It might.
Yeah.
Somebody correct me if I'm wrong on that.
People smarter than us can change the score if they know
So
that.
I'm going to say there are some switching costs, right? Loose switching costs, because the people that are buying these chips can buy from anybody. And I also didn't see anything about like they're competing on cost and features. They're
Right.
not competing on once we get a design win. There's but I will give them some credit for that. So I'll say 5.
Mm-hmm.
Do they have a cost advantage? They are vertically integrated,
Mm-hmm.
and they do have distribution. They do have scale. So I'll give you some points there. Is there a premium brand? People know the name Micron. They know the name Crucial, but are you going to be paying more for that? No.
Look, to me, the fact that they do unbranded chips just tells me that that's not an advantage. Now, they do have 47,000 patents. Does that mean anything to you?
No.
Okay.
Patents to me are like, unless it's a drug,
Right.
unless it's a drug that we have the patent on this drug and it literally prevents anybody else from selling this until 10 years from now, that's what I'll pay for. But thousands of patents, so patents are great if they literally prevent competition. There's competition.
Right.
So that, no. Counter positioning, no counter positioning. Moat direction, I'll say they're getting stronger.
Mm-hmm.
They're making investments and all that kind of stuff. Optionality. Do they have the ability to roll out new products or new services that open up new revenue opportunities in their industry? I'm going to say they're largely going to be a chip supplier, a DRAM supplier, and a NIP supplier. While they do have the ability to roll out new things, they just sold one of their new products. So that was obviously a flop. So I'll give them a 3. Organic revenue growth, for now, it's good. And we're judging it by now. 4, are they a top dog and first mover in an important emerging industry? Are they the top dog? They seem to be the industry leader in memory.
Jorge points out that they are used on all of NVIDIA's cards.
Oh, thank you. That's helpful. That's helpful. So sure. Do they have operating leverage ahead? Well, we just saw operating leverage, right? We just saw their profits go from not much to huge. We saw earnings per share just jump a bit. Is there a lot more operating leverage ahead? Operating leverage is going to give and take.
Yeah, it's
now
really
it's giving. I could see it taking in the future. So for that, I'll say 1. Customer acquisition costs.
Super cheap.
5 out of 5.
Yep.
You don't spend much on customers. Customer dependence. Once a customer starts buying from you, what is their spending pattern? Well, it's going to be cyclical.
Well, and one place that showed up was in their concentration, because it was like, and this year, this one was 13% and then they dropped off. And in these 2 years, it was 11 and 12, and now they're not in the top.
Now, you could make the argument that because of 5G, because of AI, because of the things they're selling into, that their end demand is going to become less cyclical for the next 10 years, right? You could make that argument. For that reason, I'll give them a 2. Normally, I would give them a 1, and that might be underselling their potential. Like if they're just going to be secular growth story from here, independent of the market cycle, that's possible. That's possible.
Yeah.
Is revenue recurring? Sort of.
Yeah.
2, do they have pricing power? Oof. When their good chips come out, sure, gross margin rises, and then eventually things take over and it falls. No, I ain't giving you much credit for that. I'll give you a 1. Soul in the game. Is it a? This is the guy. Seems like a very accomplished person.
Yeah.
He is a founder, not of this business, no. And he's only been there for 5 years, so I'll give you a 2. Inside ownership is very low, sub 1%. I'll give you a 1 there. That's being generous. Glassdoor ratings also being generous. I'll give you a 3. Mission statement. You don't know what a mission statement is. You confuse that with a vision statement. So I'll also give you a 1. Okay. Stock performance. Smash the market.
But again, all of that has come in the last 5 years.
5 years.
All of
it.
And
it's been a checkered history. Reminds me of AMD. I'm just on the Yahoo page real fast, and they have beaten all 4 of their most recent earnings reports. Sorry, skipped 1. 4 out of 4 on that. And how are they doing? Are they buying back stock? Yes. Are they paying a rising dividend? Yes. Are they repaying debt? Yes.
Hey,
they were.
That almost never happens.
I know. So 66. Accounting problems? No. Customer concentration? I will subtract a little bit for that. Industry disruption? Nope. Outside forces?
I mean, they talked about China and
Yeah, that's geopolitical, right? Are they a
Yeah.
big market loser? Nope. Binary event? Nope. Extreme dilution? Nope. Growth by acquisition? Nope. Complicated financials? Nope. Antitrust? Nope. Headquarter? I'll knock them a little bit for currency. I'll knock 2 points off for currency, and I'm not going to knock them for headquarter risk, but you could throw some points in there for geopolitical. So for me, I'm going to say pass. I understand, given the mega trends we just talked about, why people are interested in this company, though.
Now, for what it's worth, I just want to put together two things that I just realized. One, SanDisk was acquired by Western Digital, which I'm sure is why he ended up sitting on the board, because it said it was acquired. If it was acquired around 2017, he went from being the CEO and founder of SanDisk to being on the board of directors of Western Digital. So it's interesting then that he left and became the CEO of one of its closest rivals.
There you go. Okay, your turn.
Mission statement. I'm going to leave it at 0 because I love their vision statement. They just, like you said, they don't know what a mission statement is. All right. So for their moat, I'm going to give them 1 point for switching costs, which is half of what they could get. I'm going to give them 1 point for low cost production because I know that there aren't a ton of people out there that manufacture their own chips like they do. And I'm going to give them half a point for intangibles. Leave it there.
Okay.
Optionality, if we can make it 1.5, I'm going to give them that because this is one where if you know more about the computer chip industry, you can give them more points if you think I'm underselling this. For financial fortitude, I give them full credit. They've got a ton of cash. The debt doesn't bother me because their free cash flow is absolutely insane. I'm going to take 1 point off for concentration. Perhaps I'm being a little bit harsh there. I don't think so. For Glassdoor, I'm going to give them a half point. Can we do that? Can we give them a half point? There we go. Because 3.9 is pretty good for a company that's that big. Founder not involved, so I'll leave that. And then ownership, I'm going to take a point off. Is that right? Oh man, I was rough, wasn't I?
Yeah, we both kind of were, but that makes sense to me. It's not that if the mega trends driving this company that they talked about, 5G, AI, automotive, those are all mega trends,
and the shortage is a minor.
And the shortage will work itself out over time. If that means that this company's revenue is about to go from cyclical and margins are about to go from cyclical to this, that's an attractive investment.
Yeah, we'll be real wrong.
Right? You could make a bunch of money off of this company if indeed that's about to happen. And if so, then a lot of the things that we're looking at are looking. Our checklist is going to be wrong.
Correct.
Are wrong on. So from that perspective, I could see I could see why some people are attracted to this business. However, for me, I'm for right now going to happy to put it in my thumbs down portfolio. And I will say, if you're looking at this company, don't look at the price to earnings ratio because the price to earnings ratio is cyclical, right? So that's the big story for me right now.
So while you put this in, I just want to point out one thing that we do appreciate is the fact that our scores on our thumbs down portfolios, while all of them are doing poorly, the thumbs down ones are doing more poorly than our thumbs up ones.
Right. So from that perspective, our checklist is doing its job.
However, as we've always said, the first couple of months of this, it didn't seem like that important to point out that 3 to 5 years is our time frame. It's really important now because a lot of the companies that we're excited about have done poorly across the board. So we're still not drawing any conclusions yet. I just want to point that out.
That's right. And like many of the ones we put in there, like one of the stocks that we put in there, I'm not betting against Micron in real life, ever. Like, no way. But I'm just not going to bet on.
Now, we've got a lot of really good, intelligent comments I think are worth sharing from a lot of them. Sasha just put a couple in at the end here about how they're investing in their first lithography plants that are coming out in 2024.
ASML's book order is filled until 2024. Now imagine further supply chain issues, but that's the same risk for all of these companies. Yeah, it is boom times right now, right? So right now we are are we at a cyclical high? If so, that earnings, the free cash flow and the earnings, they're not, are they 3 years of good numbers? And then what happens next? I don't know.
That is the hardest part about this, right? Because with a lot of that's the difference between cyclical and something that's steady state, increasing, secular, moving forward, is that you can't count on that.
Right. That's the tricky thing. Great comment by Sasha. NVIDIA and ARM are putting more memory in their chips. That means more chips. That's great. That's great news for Micron, if true. Yeah, again, if there's reasons to believe that the cyclicality is at least going to be over for a few years and that high sustained gross margins and high sustained profitability are here to stay. If so, this could be a great investment.
Here's one thing to know, though. At the first sign of them slowing down, you'll see the stocks slow down probably significantly.
Right.
Because people are going to say, okay, that was the top.
What about their patent infringement in case against Netlist? I didn't know that. Yeah. Here's by Rosen. Or the lower the PE ratio, the closer to the peak we are. The peak was in 2018. The slight uptrend during COVID is not important. Could the problem with non-recurring revenues need to be considered with chip shortages expected to run for several years and devices yet to mature? That's up for you to decide. There's an argument to be made there. I'm comfortable with the way that I scored it, but I could be wrong, right? This company might have more. This company might have more credit for the things I gave it for than my score would indicate.
You know, I think Brandon summarizes what this whole thing was for me, which is feels like another company where the research provides more of a bull case than just the scores do. And we have said from the beginning, the scores give us a structure, right? But they're not the most important thing. And he said it also proves to me that the only chip makers that are investable are the main players. I totally agree with that.
Cool. Thank you so much. Well, thank you. We hope that you enjoyed that. I certainly learned something about this business. Great financials right now. The only question that I have is this a cyclical high, or is the company on a new sustained platform to ride out cyclicality for 1, 2, 3, potentially even more years? If that's the case, I think it's going to be a good investment. If it's going to return to cyclicality, I would prefer to give it a thumbs down than a thumbs up.
Yeah. And you know what? Anyone who tells you they know for sure what's going to happen, don't listen to them, because the most honest thing is to say, check back in 3 years. We'll tell you if it was a cyclical high or not.
Manish Pabarai's reaction, his 78% of his portfolio is MU. Well, I guarantee he's done a lot more research on it than we have.
I can guarantee he's got a higher IQ than the two of us put together, right. Probably too.
Very much so. So if that's true, that boy is that a concentrated bet. And again, we're not betting against this company. I would just say I'm not going to be betting on it for me personally. But hey, I could be wrong, right?
Yep.
Well, we hope you enjoyed this video. We'll be back next week with with an earnings report. That one we're going to be covering UiPath live. So hope to check you out, guys. Hope to check you out then. Thanks so much for watching. Brian's out.